Good morning from Chicago traders. It is 8:03 a.m. Chicago time, 9:03 Eastern on Wednesday, the 1st of November, first day of the month, 2017. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Today, the market is allocating to risk. The DAX is back and it's furious today. The DAX up 245 points, trading at 13,467 even, up 1.86%, followed by RBOB gasoline up 1.56%. Make sure you hit the gas pumps today before prices go up in the next day or so. Crude oil is trading at almost $55. It got to 55.22, up 1%. And then we have the Russell, Dow, the Euro stocks, gold, NASDAQ, S&P, all leading the pack. I'm expecting that today's broadcast is clear. They worked on the line yesterday. Um, and hopefully, fingers crossed, no dropped frames. The laggard today is Japanese yen, a reserve currency, and the euro. Uh, the laggards actually are the yen, the euro, the bund, and the 10-year note. So those are the safety products, and they're negative today. The yen is down 0.47%, half percent almost, um, coming into today. There've been comments released from the Prime Minister of Japan regarding the aim for the country to um, combat deflation by accelerating wage growth. So that's having an effect on the yen there. As far as what's pushing us around, one of the key things you need to remember today is that we are going into Fed Day. The Fed meeting started yesterday at 9 a.m. Eastern, and the results come out today. It's very important that you're aware of that. We do get the Fed decision at let's see, 2 o'clock Eastern, 1 Central, 2 o'clock Eastern. The market is pricing in almost a 0% probability or chance for a Fed rate hike today. Market's pricing in 66.8% chance that it'll hike before the end of the year. The odds of a December rate hike are over 80%. We're over 80% 2 days ago. The market seems to think that we're backing off of raising rates at all. So that's what's on deck. We have other figures. Of course, we got ADP this morning, but we do have construction spending coming at 10 o'clock for September, negative 0.1%. ISM manufacturing at the same time, 10 o'clock Eastern for October, expecting 59.4. We do get crude oil inventories expecting a draw of 2.1 million. Distillate inventories expecting a draw of 2.5 million. And gasoline expecting a draw of 1.25 million barrels. Again, the FOMC rate decisions expected at 2 Eastern. Pay particular attention to that. And that's all I have for you for what's coming up. I'm going to take a few moments at the end to talk about failure. I've received several emails, people struggling. It is a tough environment to day trade. And I just want to talk about failure for a second because it seems like we're doing the human thing, which is to just do what we can to avoid it. And I just want to shed a different point of view, hopefully, on that particular subject. As far as what we expected yesterday we're looking for an open auction that fails down into the prior day's point of control at 25.69 even. 25.69 even. I outlined with this circle right here yesterday that there's likely to be some pretty good support in that area, 69.68, and then I'm looking for a turn up and for the market to start moving up towards that 77.75, 77.75, the naked point of control, and to take out this failed attempt at testing that high volume number that we've left behind from last Friday. The expectation is we would turn and test that out yesterday. And that's basically exactly what happened, except for the fact that we did not test out that number. So let me pull out the intraday here. Here's what things look like. So just as expected, open, drop, 69 on the tick right there. 69 on the tick is shown on Hypo 1. And then we get the push up, consolidation, continuation higher. The market ended up selling off. It's the end of the month, so we get that readjustment at the end of the month. But you can see there's a delta fight here, big doji bar on the delta at the closing 15 minutes of cash. But overall, the expectation was for the market to drift up to 77, 75. That's the only part of Hypo 1 it didn't accomplish. But again, we did have some pretty good support there, and it held up, and it's the point of control that that caused the turn over here, and that's how things played out. So Hypo 1 was on point. Not always the case, but yesterday it definitely played on point. The second is a drift, is the pre-FOMC drift up. Pre-FOMC drift up into 77, 75, and that did not happen. We usually do drift up on FOMC, and we didn't see that yesterday. Okay, from there, the overnight session. The overnight session. The Asian Open is strong. We open strong and then sit sideways until we get to the European Open. So the market just sat sideways, and then on the European Open we get the strong updraft and a continuation higher. Volume is really strong in the overnight session. The profile is short covering type, lots of volume near the top, and the market is showing a lot of strength. We've pushed to 25.84. We're approaching that double measured move high at 87. That's the expected target. Okay, and so that's how things are set up in the overnight session. The overnight inventory is almost completely long, and the interesting thing to note here, as the price is higher, as you can see there in this pattern. Look at the delta. The delta is fairly flat, so not very convincing on this up move. There's a lot of volume. We would expect people lifting the markets to participate very strongly and push delta up, and they did not. That's a very strong hint. This is a weak-ish ride up. I expect the market to correct on the open. That takes us to our plan for the day. Oop, let's get rid of that. There we go. So we're looking for what our plan is for the day. Again, I will not be able to cover the Russell. Just apply the same logic to the Russell. The Russell actually is pushing a very key area. I'll show that chart for a minute. This morning, open auction, all-time highs at the all-time high, open auction, looking for the market to make a quick trip down, start to move towards closing this gap zone. There's a gap zone here. The mid is the prior close from Friday. I expect it to push down there and then look for the impulse up to test the overnight high for the overnight stat, consolidate, push to 87, and then sell off. And then we have FOMC, and FOMC, it's anybody's guess which way it's likely to go. The FOMC is likely to have us flush down and push higher. So I'm looking for that 87 today. I'm looking for a pretty good base in the 77, 75, 78, 50 area and the gap zone mid, and that would be scenario 1 for today. Pretty much a no-brainer. Secondary scenario, open auction, attempt lower, impulse up, push through the overnight high, failed retest of the high, consolidate into the FOMC, drift down, and then we get the FOMC. then we have a push up into this 87 or beyond area on the FOMC. So we want to make sure everybody knows FOMC at 2 p.m. today. That's scenario number 2. Scenario number 2 basically tests up and fails to continue higher. Scenario 1 tests down to the gap mid to 78 bases and then pushes the overnight high. Scenario 2 pushes the overnight high and fails back down. Okay, those are your 2 key scenarios. A quick look at the Russell. If I can find it. Here we go. So the Russell's been in a downdraft for a long time, right? It's been while the S&P is making new highs, the Russell has been running this downward channel and is not able to go higher, making the small caps weak. But yesterday, if you draw a profile, a composite profile, sorry, my son had to say bye. If we draw a composite profile from the 29th, from the 29th of September all the way through to the day before yesterday, for yesterday's profile, you'll find that the point of control is at 1508.1, which is the naked point of control as well. And what the Russell did yesterday was very, very methodically work its way up to that price, and hit it right on the penny. It missed it by a tick. Right here, this black line, this is the MC point of control. So we've tested the MC point of control from below, and we backed off strong. We dropped 6 points, a big move on the Russell into the end of month. And so the Russell has tested from below, has tested this MC point of control from below. I know this looks like a noisy chart, but so let's clean that up. But we've been drifting down, and we came back and tested this black line from below, and then today it's trading at 1514.8 with a high of 1516.3, exceeding the last few days. So what the Russell is starting to look like is it's starting to look like a bull flag, push, drift down, and then push up. This is what it's looking like, and the drift down is this area here. I'm suspecting that the Russell is likely to be a laggard, continue to be a laggard and be slow. But once it breaks through on the open, I'm looking for the Russell to actually open, have an open auction that then sees an open drive, that's likely to see an open drive down, or an open test drive down back into the 1508 or 1509 area, 1509, 1508 area, before it settles down and then and basically sits sideways. And the reason I expect that is the test from above is not complete. We still don't know what kind of buyers we have beneath us, and we're likely to test them this morning by advertising price lower. A lot of people are likely to jump on the bandwagon short on the gap up. So that's just a warning to you on the Russell. We'll see how that works out, but that's the product I'm paying the most attention to currently. I wanted to make sure you've had a look at it. Quick reminder, I know this is getting long in the tooth here. Quick reminder, I'll be in Vegas tomorrow. I'm traveling tomorrow to Vegas to speak at the Traders Expo under the Global Macro Edge series, and I will not be doing a Trader Bite tomorrow or Friday. So I'll not be here for that. I'll be back on Monday morning. In that vein, I wanted to leave you with this message. Okay, it's really important for traders to become aware of what they fear and to warm up to the potentialities of actually being a trader. It's a high performance sport. It's a difficult thing to be a trader. Once success hits, it is very bountiful, and we have a lot of gratitude for it, but getting there is pretty tough, and I've always said that. Make sure you manage your expectations as a trader. It is a tough business to be in. Now, looking at failure, I have failed a whole lot. I continue to fail here and there in certain aspects of my life, and I've learned not to avoid it. I've learned to kind of have a collision with my failures, and if I see that I'm failing at something, to just get it done with as quickly as I can, as opposed to prolonging it. It's kind of like pulling the old Band-Aid off. It's much worse to do it one little piece at a time. Just I prefer to rip it off. Now, one of the things that I learned about failure in trading, uh, either through myself or through my prop traders in the past, and also through uh, current clients with stage five tradings and other stage five trading and others in the brokerage, is that failure is really in its core is a testament to the fact that you tried. Now, if you look at the number of things you said you're going to do and never even attempted, those are truly tragic failures. We spend a lot of time talking about what we want to try and what we want to do, and then we never ever do it. So we are afraid to commit to that relationship. We're afraid to commit to purchasing a home when we think prices are favorable. We fail to go out and look for a job and just grind it through our job that we hate and the boss that we hate. Uh, and so on. And so this is how people avoid failure. And so if you look at your own life and look at the way things have played out for you, you'll find that the worst part, the worst things you're looking back on are things you never tried. And so failure is really a true trophy in that it's a testament to the fact that you tried and we're not good at something. And we're not good at something. So most people say no and they don't even bother to try. The other thing about failure is it instills more discipline. The more you fail, the more likely you will do in the next thing you take on, you will do what you're supposed to do. It makes me more focused to fail. Okay, so if I set out to do a half marathon and I quit halfway through, it tells me that I did not practice enough. I didn't give myself enough time. I didn't go out for longer and longer runs as I should have. I was being lazy. The next time I attempt, I'm going to be a lot more focused. Failure also affirms our values and priorities. When you fail, it forces you to really ask the question, do I really want to do this? Is this really who I am? And you need to have that in trading, because no matter how successful you could be $1 million a year trader, $12 million a year trader, you're going to hit a rough patch. You're going to have some terrible days. And having failed, you already have the foundation and the emotional capital to just stick with it and know that it's a priority for you to continue. If you never fail and you just avoid, you're likely to just quit and move on and never really find out what your true potential is. I cannot emphasize this enough. The number of people who have never tried or just took the first step and then just gave up. They bought that guitar and they stuck it in the corner of the room and never really tried to study. They never bothered to fail in other venues. I like to hire traders that have failed at something and then prevailed. It's very important and very elusive thing to have. Also, failure leads to grit. The number one characteristic a trader has to have is grit. I've talked about this in the past. Grit is key, and grit does not exist without failure. So welcome your failures. It makes you a better teacher. So, speaking of something working or not working, when you haven't really experienced the failure of it, you're a phony. You're a fake. You're somebody who sim traded, or somebody who traded a $5,000 account and maybe made a little bit of money and then blew out, and now you're calling yourself a teacher. That's not failure. You're not really trying. You need to try and truly fail miserably to be a better teacher, because then it helps you understand the student's psychology. It helps your fears subside. So when you fail, you start to become less afraid of what's likely to happen. You're more likely to stick to your plan. You're more likely to follow what you're supposed to do, because you come to realize that this horrible thing that you've been raised to think is terrible for you and you should avoid, it turns out to be not all that bad. Failing's not that bad. You also learn key characteristics about who you are. Who are you? What are you like when you fail? Do you choose lower values? Do you cheat? Or do you continue to be strong in who you are and develop who you are? You have the actual experience that failing isn't at the end. isn't the end of life. It is a chance to redirect your focus. This is an important fact tying in with everything above. It helps you determine which path. Now imagine if you avoid failure forever, and then now you're 90 years old and you're passing away and you're on your deathbed and you've avoided failure. Chances are you've spent your entire life working on something that wasn't going anywhere. You should have failed sooner so that you can redirect your focus to something that will make you more happy and make you more in tune with your potential. You start to see challenges and obstacles as surmountable. So you start to see that anything can be done. You know, the growth mindset. Instead of a fixed mindset, you have a growth mindset. I personally do not believe that there's anything that I cannot learn. Okay, I might suck at things, I might fail at things, but I don't believe that I cannot learn something. Show me something that I take interest in, I will learn it. 9, you learn to not eliminate the idea, but to try and fail again. Don't throw the idea out. If something speaks to you and it seems like a great idea, go for it. Give it 100%. Give it 100% from the very get-go. Don't stretch it out and fail at it. Trading is one of those things. Give it 100%. Do the homework. Focus on your errors. Focus on improving your trading on a daily basis. Give it 100%. Give it 150% and get it over with. If you fail, you fail. Great. Move on. You lost some money. It's not for you, move on. But if you sit there and simulate for 10 years or, you know, take two-tick losers on a daily basis and avoid losses, you're not going to get there. I'm telling you, it's not going to happen. That's just my opinion. And finally, you become more passionate about the next thing you choose to do. So you failed, great. Now you're passionate about what you're going to do next. Your character's been built. You're not afraid of failure. You're more disciplined. You understand your values and priorities. You learn about your characteristics. I mean, come on. If failure was a pill, it would be prescribed to everybody because it makes our immune system much stronger, right? So think of failure as something that is not something you avoid. It's something you overcome by doing the work, but if it still shows up, if it happens that you don't have the luck to be able to do it, then so be it. Okay. I really want to instill that in you as trading is hard and it's been difficult this last year and a half, almost 2 years. And the market goes in cycles, but it's not a time for you to just become negative and lackadaisical. Your practice. Come in every day and make sure you're giving 150%. And if it leads to failure, good for you. At least you found out. You can move on to something else or change your style or whatever. That's all I have for you. Good luck, and I'll catch you on Monday morning. Take care.